Welcome to Planet MicroCap. I'm your host, Robert Kraft, and joining me right now is Nick Randall. He's the incoming president and CEO of FreightCar America, Inc. It's a publicly traded company. The symbol is RAIL on NASDAQ, rail. And FreightCar America will be presenting at our upcoming investor conference, the Planet MicroCap Showcase, taking place in Las Vegas at the Paris Hotel and Casino on April 30th through May 2nd, 2024. For more information to register to meet Nick, to see the FreightCar presentation, please register at planetmicrocapshowcase.com. And with that, Nick, thank you so much for joining me today. How are you doing?
I'm great, Robert. Thank you very much for the introduction. Thank you.
Absolutely. It's great to have you, and look forward to hosting you in Vegas. So first question I want to throw at you. Can you, this is my first time doing an interview with you and covering FreightCar. So can you provide our audience with a quick overview and history of the company?
Sure, but really happy to. So FreightCar America is a leading designer, manufacturer, and supplier of railroad freight cars, railcar parts and components. We also specialize in railcar repairs, complete railcar rebody services, and railcar conversions that repurpose idled rail assets back into revenuable service. We have a long, well-established history. Since 1901, our customers have trusted us to build quality railcars that are critical to economic growth and instrumental in the North American supply chain. For over a century, the company was dominated by coal car manufacturing, and they produced the vast majority of coal cars across North America. After major declines in coal production and consequently coal car demand, we took the opportunity to close our legacy factories and diversify our product offering away from coal and into a broader range of freight car types. Over the last 5 or 6 years, the company has undertaken significant transformative efforts and strategically repositioned our footprint at a much lower cost base. Our restructuring efforts have culminated with a recent relocation of all our production and manufacturing facilities to our newly purpose-built facility in Castaños, Mexico. Our new campus features the latest equipment, a highly skilled workforce, and a convenient location for sourcing materials and labor, and the new facility is poised to scale the business for our next phase of growth. With the favorable cost structure of this facility, we recently delivered our second consecutive year of positive operating cash flow and expect to deliver a third in the year 2024. The combined benefits from high volumes and the productivity position us to become an increasingly more profitable company moving forward.
Very good. So, as you outlined, the company's been around a long time. Since 1901. And it is as uncomplicated a business as it gets, and one of the oldest industries as it gets, railroad freight cars. We've been doing this for a long time now. Mm-hmm. So what would you say the competitive landscape now looks like nowadays? I mean, is there still a lot of competition out there? And if there is, how does FreightCar stand out amongst some of your peers?
Sure. Let me get a good question. So first and foremost, FreightCar America is a pure play manufacturer. We have a unique manufacturing capability that allows us to optimize our backlog and respond to customers' delivery times and requirements quickly and efficiently. Our engineering capabilities allow us to offer somewhat tailored solutions in areas where our competitors can't or don't, and allows us to foster deeper customer relationships and enhance our brand loyalty. An important piece of that is our manufacturing footprint is vertically integrated. When we reduced our US operating footprint and started in Mexico, we designed our business structure to have a much lower fixed cost profile so that the company, going forward, would have the more agility during cyclical downturns, but also be able to achieve a break-even point that can be surpassed even at very low volumes. And that is, compared to our history and compared to our competition, it's a much lower break-even point. From 2020 through the end of 2023, we produced 45 different car types across 30 unique customers on 3 production lines. As a result, we're very focused as part of our manufacturing excellence on how we execute our product changeovers. We're essentially a low volume, high complexity manufacturer. That means we batch produce quantities of rail cars. A batch might be as low as 100 units, and it may be as many as 1,000 cars. To do that, we set up a line for a product type. We produce the customer's order, and then we change over to the next line and do the next product type. Building these competencies to do that efficiently and effectively is somewhat of a science that we've spent time and effort to perfect. The less time spent on product changeovers, the more time we can spend on producing additional units and building product to ship to our customers, and obviously further expand margins. So for that reason, our ability to build small, complex batches, we believe is a truly differentiating factor. And then another key differentiating factor is that our commercial strategy, we're quite a bit different than our much larger competitors. As we are a pure play manufacturer, what makes us so differentiated is that we're not in the leasing space, which our competitors are. So we're not competing against leasing customers, which are primarily our biggest source of customers. So leasing companies represent the majority of industry purchases in a typical year, and our focus is to partner with leasing companies, and we're certainly not in competition with them. That is, we're not building and operating our own large fleet for lease. Our ability to respond to customers' delivery requirements quickly and efficiently is vital for us. And unlike our competitors, often requiring long lead times, FreightCar's flexibility meets a niche customer demand, and we can offer shorter lead times to customers when required. We're very well positioned, and I believe that we have an industry-leading order fulfillment time of between 4 to 9 months. Again, this is due to fast changeovers, efficiently in how we run our factory, and our ability to respond to shorter lead times now by our customers. And we also intentionally try not to maintain large multi-year backlogs, and we like to keep capacity open so that we can offer to our customers when required, sort of those short lead time opportunities. And we have a very well-respected technical team within our industry, and our product excellence truly is second to none within the industry we operate.
All right. Well, Nick, to close this out here today, because this is one of our quick hitter interviews, from what you can tell us, in brief, what would you say are some of the company's goals that you'd like to see achieved for 2024?
Sure. We've spent some time building this campus in Castaños in Mexico. We have the capacity installed at the moment to build about 5,000 railcar units. Last year in 2023, we shipped just over 3,000 railcar units. This year, we're providing guidance for 4,000 railcar units, which is going to be a significant growth from revenue perspective. And then we look to position ourselves to be able to expand our portfolio beyond 2024 we already have products available, such as a tank car, which we are looking to expand our market share and being able to offer tank cars to our customers as well beyond the year 2024, and other products we may offer in our portfolio.
So Nick, with that, where can our audience go and find more information about FreightCar America?
Sure. So the best place would be FreightCarAmerica.com, which is our website. You'll find a lot about our operations, our facility, our product portfolio, and the leadership team. Or you can come and see us at our presentation here in Las Vegas.
Nick, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe, and I'll see you in Vegas.
Thanks, Robert. Thank you very much.